Morning. Morning, everybody. Hope you are well. David, Griffey, Leon, Dale, John, Silver. Morning. Hope you guys are all good. Let me know I'm coming through okay before I get through. I think I'm coming through all right. Before I get started, yep, thank you, Leon. Appreciate that. Okay, let's get into the markets. Actually, before I get into the markets, I'll go through my message on the group this morning about the aggressive. So, yeah, I was kind of thinking on my walk, and I just, you have to remember with the aggressive strategy, this has been started in October. It's not like it's been started recently. I started testing this or forward testing this strategy in October, which is what, October, November, December, January, February, March, April. I mean, that's 7 months. So it's not as if we're going in kind of just blind, let's say. We're not going in kind of blind, and I really like it. And what I'm personally thinking is, obviously the results are good, the edge is there, right? And because it's a little bit of a adaptation to my personal strategy, which I've obviously traded for years, I'm just really confident in it. And not only that, is that it excites me, right? So what I'm doing, my breakout retest, it's not that it's boring, but I just know what I'm doing day in, day out. And I think this kind of added excitement of a strategy that can get a very good risk reward is something I kind of want to do. So I understand I said I wanted 20 trades, and that is true, but I know what I'm looking for. And I know that it works, and I know there's the edge there. And I'm happy to really take the risk of, potentially, if we talk about an equity curve, even though I don't think this is the case, I'm happy to take a potential little risk over the next few months, with the ultimate goal of, original equity curves kind of being like this to going like this, where we're making a little bit more, and certainly having that strategy that has a bigger RR in terms of our breakout retest and breakout, because we know the breakout retest is your pretty standard blue chip strategy that's going to get you, your 20% a year, and you move on with your life. But this aggressive one is just something that I really like. So in my personal mind, I'm kind of wanting to, and again, this is not me working on impulse. It doesn't matter about the market conditions. I do think it's quite good for these market conditions, but that's irrespective. It's the fact that I want to do it. And I think, I think 7 months, and I think looking at the charts and knowing what I'm looking for is good enough for me to implement that. And, as I go along with live markets, as I said, I'm happy to take that risk. And I also work on building it in the live conditions. So, when we're looking at things like this, NZD CAD, which is still running, by the way, I think it's almost roughly around 12% profit. So for me personally, I'm not even going to go in and say I'm going to risk less, because it's still, after 7 months, we look at it, this will probably be 28 or something by the time NZ CAD is out, depending on what happens with oil. But, I'm just, it's still selective. It's not as if we're trading it every single day. If I had a strategy I was trading every day, then I would understand it. But we're talking probably about 2-3 extra trades a month. And, for me personally, putting that extra risk on the table, I'm more than happy with that. In Mark Douglas, if you read the Mark Douglas book, Trading in the Zone, you've got to truly accept the risk you're taking. And for me, I am. And I think the risk reward and more ultimately the fact that I just want to do it. I'm excited to do it, and it brings me like a little bit of, I can't wait to start trading this. I'm happy to do it. So that is what I'm thinking today. I know 18 trades, is that enough for data? In terms of a newer trader, probably not. In terms of a completely new strategy, probably not. But this is an adaptation and a modification to what I've done for years. So, from a personal point of view, remember, I will always put a little bit of a disclaimer if I put in trades for the aggressive, but I'm going to start trading it. I've made my decision this morning, and I'm going to start trading it. And as I said, I'm personally happy to take the risk. And, there's the edge there. So I think we make something out of it, and from this point onwards, I'm going to start trading. So just a disclaimer for everybody. I know you talked about silver taking only A-class setups, and that will be true. I will absolutely do that. So the ones I'm not 100% in, which makes it again a little bit more selective, then I just don't take, because I feel like I'm getting to the end where I'm just taking ones to fill this 20 rather than anything else, because it has been so many months. And yeah, ultimately, I'm going to start implementing this, and let's have some fun. Let's have some fun. We're supposed to enjoy what we do. The edge is there anyway. The data is there. There's enough data, and yeah, I want to. So yeah, that is my thoughts for the morning. Right. Let's go into, and as I said, I'm going to risk 2% on each trade as well. So I'm just going to go full blown into it. Okay, so markets this morning. We did have a slight fake to the downside in this SPX. We've closed as a certainly a bullish hammer here. A bullish hammer here, rejection to the downside. What we kind of often see is if we're coming from deep, and we are relatively coming from deep. I know indexes are different from currency pairs, where if this was a Forex or any kind of currency pair, you wouldn't be taking that break because it's too extended, moving into a very key area. So because we've had that, this doesn't have to happen. It could be a dead cat bounce. I'm expecting some sort of reaction before, again, continuation to the downside. Yes, could this be the end of this? Absolutely. But until we get more confirmation and more real bullish pressure coming into the market, I'm not going to say a change in trend here. Absolutely not. What I can say, because this is coming on a little bit of volume, because it is a rejection, I am expecting some bullish pressure in this stock market. But whether that sustains or not, we have to wait and see. If we look at the smaller time frames, right? We've got that outside bullish engulfer on volume, on that break. It has been relatively healthy on the 4-hour chart, but it's just, for me, not quite ready to go. So I am ultimately looking short, and I'm looking for a reason, that kind of reason to enter, the reason, let the market tell me that it wants to fall rather than predicting. Certainly some bearish pressure coming in there. So ultimately, I think possible pullback to sell off is going to be my same bias. But it could continue for a possible few days, some bullish pressure. But let's see. Okay, dollar. The dollar again is interesting because we've not broken these highs, right? So B wave could still be on here for a little bit of a deeper corrective. And if we do get that push in the stock market, I would expect that to come to fruition with the dollar potentially weakening off. However, on these smaller time frames, it doesn't actually look that bad for continuation. We're getting our basing structure here. We're getting our pullback from our latest kind of impulse, and it does look relatively healthy on these smaller time frames. It would look even better if we come down and do this, i.e. to digest this first basing structure before we push on. Breakout, retest, movement to the upside. Potential that is there. Not a trade I would take because of the extension on the daily time frame. But, excuse me, guys. 1 second, I've got something in my throat. 1 second, guys, sorry. Sorry, guys, I've got something thingy in my throat. Okay, right, it's out now. Okay, yeah, so from an hourly perspective, yeah, I would like this to move to the downside. Yeah, I hope I've not got COVID, mate. But no, I think I'm okay. I'm not ill or anything, just a bit of a cough. So, but thanks for asking, mate. Appreciate that. So yeah, I would expect this to come back down. Something like this would be quite healthy on the smaller time frames. I just think it needs a little bit more from a daily perspective. Possibly a bit of correction through time, possibly a little bit of correction through price, but I need that 20 catch up for me to really consider again that continuation to the upside in the dollar to be healthy. But we've seen it with like the yen the last few weeks. it kind of going out with technical analysis and just weakening off. Whether this happens with the DXY, we'll have to wait and see. We could be getting into a slight wedging structure as well. Theory dictates this move to the upside. But let's wait and see. Let's wait and see. Too many hours in the sun. Yeah, I know. And also recording all these videos, I think is getting to my voice. You know, I'm obviously redoing the videos for the Trading Academy. And maybe I just need to take a few days of not speaking to anyone, I think. Morning, Becca. Morning, Becca. Morning, James. So yeah, bias for the dollar would still be that ABC. I think that would still be my bias, but I wouldn't discount a movement to the upside depending on what happens with that stock market. Okay, watch this today. Again, not much on it. Not much on it. We've got a few breakouts here. New Zealand Swiss is still in. Obviously, we had that RBA news out, which was relatively unexpected, a bit higher change in the interest rate than the market did expect, which had an initial bullish reaction to these commodities, and they've come off a little bit. So what I'm looking for here is basically an anchor to be, or not a swing, but an anchor to be created. And we would need 2 bars here lower, because we've got 1, 2. We're looking for 2 more to move our stop down and basically half our risk. So with the news that we've had a few hours ago, there will be some volatility as we've seen there. And essentially, yeah, I'm just looking for my anchor, and I will reduce my stop by roughly around half if we do get that on NZD Swiss. But it's certainly a slow burner, you know, certainly a slow burner down here. And, you know, maybe we continue with that. Maybe we continue with that, but let's wait and see. I know, Silver, huh? I know. I think that's what it is. You know, I go from not speaking at all, and then for the past months and months and months doing so many videos where I'm speaking, recording, re-recording, doing streams, you know, I might just tape up my mouth and say I'm just going to give it a wee break. Kind of like how I guess artists, right, singers, sometimes they get problems with their throats, you know, and they have to not speak for a while. But I have noticed that since I've started doing this job, I do get kind of more with my throat, like a little bit more coffee, because I'm just recording and speaking throughout the day. And obviously I can't not speak when Megan gets back home, because she'll be like, what are you doing? You know, you got to speak to me. Anyway, yeah, so New Zealand Swiss, I'm looking for that anchor for a continuation to the downside. And, you know, that's in now. I've taken the risk of not taking TP1, and I'm still relatively happy with it. I'm still relatively happy with being in that risk-off currency against the Kiwi. But anything can happen right now. Anything can happen. That's why we like you. Okay, setups today. We've got 2 in oil, 2 potentials in oil. Obviously, we're still in that aggressive entry to the downside, which I do like. You know, I do like that hammer. I do like it on volume. The long option is here. So I did see this, right? But for me, I wasn't confident in the higher time frames to take this to the upside on an aggressive, right? Outside bullish engulfer on volume. We could look at this pattern here. Your head and shoulders within it. It actually looks okay. I just didn't like it. Right, and again, the higher time frame confidence wasn't there. So the other option is we potentially get, you know, a deeper corrective digesting this structure. So we got first structure, second structure, third structure, for a breakout to the upside. Okay, that's option 1. Still got a little bit to go. And option 2 is still our daily, right? Still our daily, looking for oil to come back down, tag this area, and give us some sort of break, depending on what happens with this 200. So I have a... You know, because of the day yesterday, we did get a rejection. I have a sneaky suspicion that, you know, maybe oil starts to be a little bit bullish from a personal kind of hunch perspective, because of what we're seeing on this 4-hour. But we're going to have to wait and see on what option potentially sticks out for, you know, the rest of the week. I would still, obviously, from an aggressive point of view, I'd still like this to come down. I do think that makes more sense to me. Oil coming down from this 105 area makes more sense to me fundamentally. Again, from a technical perspective, that is irrelevant. I'll just be looking at what I see on the charts. And, yeah, let's see. Oil potential longs, oil potential shorts. Bitcoin to 30K, is that still on the cards? Potentially. Potentially. The 4-hour breakout is not there. I don't think this is quite clean enough. I would like to see the candle bodies come down here. So I don't like that option. I don't like that option, but I do like the daily. The daily, we've created our larger V reversal. You can see here. I can't move back on this particular chart, but I consider this here 1 touch, 2 touch. So we're looking for that digestion of this latest impulse, i.e. looking at roughly 30 to 50% from this larger V reversal. Something like this. Possible aggressive entry to short it up in here, but ultimately looking at Bitcoin to move down to around that 30K mark. You know, roughly around, where is it? Somewhere down here. And I like that trade. You know, I'd like to be involved in Bitcoin shorts. I'd like to be involved in crypto shorts. I just think we either need a little bit more digestion through time, in which case the aggressive entry is not on the cards. But ideally, we get something this, and obviously, ideally, it becomes in the form of an ABC, aggressive entry in here, and we look to short the market as it comes back down. You know, I said 30K a few times, and then it looks as if it's pulling pretty bullish. I just think it wants to hit it. You know, I still do think it wants to hit it, and maybe this is the time. Maybe this is the time, but it needs possibly another week before we look at that. You know, ideally, you get something like this, right? That's what you're looking for in terms of your aggressive. Something up here to short it. That would be perfect. So Bitcoin shorts I will be looking at. And it looks pretty good. Looks pretty good. And finally, New Zealand yen. Now, this is one that I do like, which could be quite close, potentially. So we know the daily is a bit of a mess, right? But it's a mess in terms of trend continuation. It's not really a mess in terms of shorting it. We've got our confluence here with that outside bullish engulfer 2 days ago. You know, obviously breaking through market structure here. So the longs for me don't make sense, but the shorts do. We look in our 4-hour chart. If we move over to the weekly as well, right? You've got that weekly confluence with certainly with your inverted hammer here coming on volume, but also your wicks to the upside. You know, the market's trying to push it up. It keeps getting rejected down. So yes, it could be pullback, but that's okay. You know, it could be pullback, but that's okay considering the risk environment that we're on. So this is close. You can see our first structure here. So first structure here. What I'm looking for is, excuse me. What I'm looking for is a little bit more. So if we consider structure 1, i.e. our cup structure, V reversal, whatever you want to call it, the same kind of premise applies. We need a little bit more than this pullback to even think about getting aggressive or think about taking this trade short. So I would say, you know, if we're looking at a very simplistic point of view, you know, we're looking at markets that kind of come roughly around this area, right? That for me, from this impulse, we can use our 40-60 box within our fib. So if we put our fib onto it from our latest move, and this is where fibs are kind of on the person, I would consider it here. You know, we have tagged that 38.2, but like I said, I just think we need a little bit more. You know, possibly we're getting into this 50 to 61.8, or just a bit more deeper and larger in range corrective, although we've hit that 38.2. That's great, right? It's good that we've had that pullback there, but as I said, in terms of range, this is just not enough for me. So looking for this to come back down, or come back up, sorry, somewhere in here. So it looks a little bit healthier, looks a bit more digested, to take it potentially short on the aggressive now. A little bit of accumulation and a breakout to the downside on the breakout. I like the idea of that, right? That trade makes sense to me. Buying the yen against the Kiwi right now, you know, and we could continue that pullback if the SPX follows through with that hammer and we get a bit of risk on intraday sentiment, people buying the Kiwi against the yen weakening off. And then if we get that bearish sentiment coming back into the SPX, which is what I'm expecting for a short on New Zealand yen, would make sense, right? So again, looking at it from here, impulse, corrective, move down, tag this key area, which is good. Need a little bit more, short it, and yeah, that trade makes sense to me. So it's probably the ones that is closest on the watch list, but you know, my gut tells me that I like that. My gut tells me that I like that. And yeah, placing myself into the risk-off assets still makes sense. Still makes sense. And I think that's about it, chaps. Anything else you guys want me to look at? I'm not sure if I had any questions. Apologies for my coughing. It's just, like I said, it comes and goes sometimes as I've been talking so much and filming. And maybe the sun, you know, even the playing golf yesterday and sun all the weekend. Maybe I'm just a little bit run down. I was sleeping by 9:30 yesterday. You know, I came back from golf and I slept probably about 10 hours. So, anyway. But I don't think I had any questions, right? Yeah, so Griffith, I like what you said here. Patience, yeah, I have patience. Better RR and the results speak for itself. That's very true. But I understand AJ's point as well. This is why I pose the question out there, is that, you know, you don't go live without FOMO. I mean, FOMO for me is, I don't really get that anymore. Not really. So it's not really about FOMO. It's not about my current drawdown. But I just want to. You know, I think I just want to. And I think there's enough there. Euro Swiss long, I'm entered yesterday about right here. Euro Swiss long. Euro Swiss long. Daily is, I mean, you could be getting this if we zoom in on the daily. So here's confluence with your potential long trade here. Head and shoulders. Outside bullish engulfer, 20 pairs starting to curling up, right? The opposite way is to look at it as potential ABC, continuation down. Okay, there's always going to be a long bias and a short bias. Long bias is that from recent price action on smaller time frames, it doesn't look too bad. You're getting wicks to the downside here, pushing through this corrective anchors, outside bullish engulfer there. Maybe slightly losing momentum here. Again, this will depend on what happens, I think, with the stock market, in where you could see this Swiss strengthening up, depending. So from a daily perspective, there is confluence there, right? Whichever way you look at it. From a 4-hour perspective, there's confluence there as well. You're getting this 20 crossing. Again, 20 periods starting to curl up. It could be that impulse corrective continuation, outside bullish engulfer, a bit of volume coming in there. Doesn't look too bad. From a smaller time, 1-hour perspective, this is where it starts to get, well, what's happening here? You know, are we losing momentum? You know, are we continuing with this larger trend? Are we continuing with the risk off? Yes, okay, we've got potential reactionary here, and then we just continue. Maybe we're getting A, B, C, A, B, C, 1, potentially 1, 2, right? Where we're losing momentum, in which case, there you go. We continue down, which can happen. And I actually like that idea, just from a general perspective. I don't right now, I still don't like the idea of buying the euro because of how weak it's been. So I think, I personally, John, I think my bias would be that, but I see your reasoning for going long. I just worry that this comes off and the Swiss does get some strength on that risk-off sentiment, and the fact that euro has been relatively weak. What would change is if you get a rejection here. You know, we're 10.54. So this hourly will close in 5 minutes. So, you know, anything can happen. But unless you get a rejection here, right, if we zoom in, you know, potentially something like this, then that would look a little bit better. So, yeah, I mean, with this one, there's definitely two sides. There's definitely two sides of which it could go either way. But I see your bias. I see why you got a long bias. XAG Euro. XAG Euro. I don't think I have this on these ones. Just for ease of time, let me just bring it up. 1 second. One second. Yep, short bias. Depending if this turns into a potential ABC here. This is my 4-hour perspective. But bias is definitely down. Let's have a look at day. What did you say? Silver down. Oh, up. Sorry, up. Yeah, okay, yep. Confluence. It's not as good as a daily, but yeah, okay. 30-minute. So you're looking there, V reversal, push on, right? I presume. V. 1, 2, 3. I mean, yeah. If it breaks through and you get your corrective in from here, then yeah. Push on, breakout, retest, movement to the upside. Makes sense. Have a look at the hourly. Yeah, I don't mind that. I don't mind that. It is counter trend. We have got the V reversal. You got that daily confluence. I think it may need a little bit more in here. So you know, if you're looking at the ABC, which, well, technically we broke in there, so it's not actually right. But ultimately, if you get your pullback, I mean, essentially that's what you're looking at. Breakout to move into the upside. Is that what you're looking at, Silver? Yeah, okay. Yeah, you got your confluence, right? You got your confluence there. It is against the grain, but you do have your confluence there. Sometimes you do see a little bit of pullback within these bars, which you may get, in which case I understand you won't take that trade. But yeah, I could see the bias. The reversal is nice, a bit more pullback within that 30-minute. I think to digest that move, and that would look good. That would look good, yeah. Yeah, don't mind that. AU short. Yeah, I still agree with the bias. AU short. Depending on what that dollar wants to do. That initial, this is what you sometimes get. The only issue is do we need a bit more on the higher time frames? In which case, maybe. But yeah, I mean everything there is telling you to go short, right? You know, for me, I would say, well, is that too far gone? I mean, maybe, yeah, for me, but for what you're looking at, you know, from what you're looking at, if you're in, I presume you're already at stop to break even, right? You know, you're getting your inverted hammer there, roughly around the area you've identified, right? Roughly around there. Selling AU still makes sense. Yeah, if you're at break even, let that run. 4 hour, again, 4 hour is a rejection there. My only worry is how far it goes. I know you've got your TPs. My only worry is how far it goes. But if the market, you know, waiting for the market's reaction to the news, that initial push up is important. That's what we've got here. So, yeah, I agree with that. I agree with the bias. But that would be my only worry. But the daily's not even closed yet, right? The daily's not even closed. So it's not like we can take this and say this is our daily bar because it's not closed yet. So we could get a massive rejection on it and we continue within that trend. Yeah, I mean, I agree with the bias. I agree with it. Break below 70. I mean, that nice psychological number. Yeah, if we look at the only other issue would be what happens with the dollar, right? Because if the dollar decides to break through these highs and just continue, then yeah, definitely. And it like I said, on the smaller time frames, there's the argument that we don't turn into an ABC, you know, and this is nice. So if it does break through, smaller time frame wise, although yes, okay, it's a little bit extended, but it's still nice, right? It's still bullish. You're going with the trend, so if you get that there, then yeah, it could be a really nice trade. Could be a really nice trade. In stock market, let's say the hammer doesn't take, the stock market does fall off. We've seen markets fall a lot quicker than they rise, right? So if we do get, if let's say this is a dead cat bounce, and we break through, we could break through with gusto, because a lot of uncertainty could fall into investment standpoint, and people will be worried, and what do they, what we'll do when people are worried? They'll sell their stocks. They'll sell their more riskier assets. And what do they have to do to sell their stocks? They've got to buy US dollars, and you can see the US dollar really strengthening up. So, although I'm thinking it does need a complex corrective in terms of the DXY from a technical perspective, I do think that. I do think we are a little bit climactic here. But dollar is still strong. So in terms of AU, yeah. Yeah, well, there you go. And if your stop's locked to break even, there you go. Perfect. To the moon. Euro USD. Actually, that looks nice. Euro USD. Did I miss that? Euro USD 30. Euro USD 30. 4 hour. Just from the way that I see markets, I just need a little bit more. In which case, I really like that. That's actually pretty nice. Unless you get, I mean, ideally I would like this, but bias is down. 20 years caught up. Is this enough? Is this enough digestion? In which case, I would put it on my watch list. EU down. Daily's not bad. Daily's not bad. I know. I don't think I can take that from a personal standpoint. I like it. I think it's nice, bias wise. EU short, yeah. Actually, if it does what you're wanting it to do, no, it's just not enough for me. Just not enough for me. I think it goes down, but it's just not enough for me to get involved in that particular context, unfortunately. If the 4 hour was a little bit better, no, it's just not enough. But I like the bias. Yeah, I think EU down as well. I think EU down. So I'm still relatively happy with being in Kiwi Swiss. This is obviously, it seems to be playing out kind of how it played out last time, right? And if we can get a move like we did here, boom, here, boom, and then not only a move that does this, but like a move with proper momentum coming into it, that would be ideal. And I do like Kiwi yen. I do like Kiwi yen. If this breaks, I can look for a breakout retest because we're not as particular with our breakout retest for the context. It needs to be there. But yeah, New Zealand yen downside I do like as well. I mean, just essentially risk off against risk on, right? Essentially, you're looking at set up Swiss yen and dollar against Aussie, Kiwi, and CAD. So yeah, that's how I would continue to play it. That's how I would continue to play it. AU finally reversed. RBA really gave a good discount on the price. Yeah, I mean, I could when I saw it came out and I saw that push, I just I did think it would be sold into on account of that risk sentiment. Obviously the very basic thing is interest rate goes up, currency strength goes up, but it doesn't always work like that. You gotta analyze the environment we're in as well. So anyway, good. Stop is locked at break even. Well done, Nick. Well done. I like to see people making money. It's always nice to see people in here making money. Or let's say, can't lose money. Can't lose money is always in a good place to be. Right, anything else you guys want me to look? Anything else you guys want me to look at before I head off? I feel like as I go on with the stream, my voice cords kind of loosen up a little bit. Maybe that's why they give singers do their warm-ups. But if there's nothing else, any other questions? As I said, today is an exciting day because I will start trading that aggressive. I'm very excited for that. I have to say, very excited for that. And just combining it with my current strategy, yeah, it's great. Natural gas